Joining me now, we've got Christian Magoon, who is the Amplify ETF CEO. Good to see you, Christian. You say expect the unexpected is the current state of the markets right now. So walk us through how you're navigating this extreme volatility and the unexpected.
Yeah, hey, thanks for having me, Brad. And certainly this is just an unbelievable market, not only in equities, but also in the fixed income market. I saw yesterday that the S&P has been trading with the same volatility as Bitcoin of late. So that's quite crazy. We think investors for their core equity positions really can kind of weather this storm by concentrating on high quality blue chip companies that are dividend payers, and then ideally laying covered calls on top of that portfolio. Essentially, that gives you three sources of total return: price appreciation or depreciation in this case, but then the shock absorbers of dividend income and option income. We have two funds that actually implement these strategies on the ETF side. Devo, which owns US high quality blue chip stocks that are dividend payers that again have the ability to have covered calls written against them. And then the international version, iDevo. Both of these funds have outperformed the S&P by anywhere from 500 to 600 basis points this year. So again, we think weathering this storm is all about high quality dividend paying stocks, and then also having the ability to write option income. You know, when volatility rises, so does option income. So that acts as an increased shock absorber during these tough market conditions. So that would be our tip on kind of the core portion of an investor's portfolio on the equity side.
When you think about those high quality ETF plays that are out there, what are those that come to mind?
Yeah, so for sure, generally dividend ETFs that focus on large cap companies, I think make a lot of sense. We also think that, strategies that not only get dividend income, but also option income are important. One thing to be careful, though, is if you're looking at a covered call ETF, making sure that maybe not all the upside of that portfolio is written away by covered calls. So sometimes you can see these covered call ETFs that have massive yields, but when you look at their total return, they're single digit total returns. What you want to see is a good balance between yield, but also solid price appreciation so that you can appreciate in markets like we're seeing today with equity markets going green. Our Devo and our iDevo ETF are experiencing the upside in today's markets, but have also have cushioned year to date against the S&P's decline.
Now, it's interesting. We started to get, at least from some out on the street, some of the largest firms talking about a potential reason to sell on the rally if we did see those. And so you're saying there are two buy the dip opportunities that you're tracking specifically right now. What are those?
Yeah, so one buy the dip opportunity is in the growth area. The NASDAQ 100 going into today was down 13%. And an area in technology that actually has had some really nice defensiveness is cybersecurity stocks. We have the original cybersecurity ETF Hack. It was the best performing cybersecurity ETF last year by 500 basis points. Hack is down just 6% this year relative to the NASDAQ 100 being down 13%. And if you think about it, Brad, you probably need to own growth for the long term, but you want to see some defensiveness in what your growth allocation is right now during times of uncertainty. Well, cybersecurity spending is resilient. Governments, corporations, individuals, they can't afford to decrease their spending. In fact, it is growing because of AI threats as well as nation state threats. So we think cybersecurity stocks are down just a little bit this year, down 6%, but are a great buy the dip opportunity because they've already shown alpha against the NASDAQ 100. And, on the other side, if you want to kind of buy something that has momentum, we're watching gold and silver, do quite well. Silver's up going into today about 7%. We have a junior silver mining ETF, SILJ, that was up over 16% going into today. I know it's up over 4% just on the session today. Silver's up as well, over 3%. Silver is a store of value trade, and certainly during times of uncertainty, that benefits as well as gold. In addition, silver has a lot of industrial usage, and there's a shortfall there. Silver is used for batteries, solar panels, electronic devices. So we think if you want to grab some momentum and see what's working this year, silver and SILJ, the junior silver mining ETF, is a great way to kind of add some alpha to your portfolio because, again, it's entering today up over 16% year to date.
Christian, thanks so much for taking the time here with us today. Really appreciate it.
Good seeing you, Brad.